Most Canadian business owners think their banking cost is whatever their monthly fee says. $30 a month, $40 a month. Some of you, I'm sure, are even on free plans. But when you add up what you're actually paying, the number is almost always 2 to 3 times higher than that, or even more. In this video, I'm going to show you exactly how Canadian banks charge you, why most of it is invisible, and what the actual cost looks like for a realistic business. Most banks charge you in 3 main layers. The first one, you see, the monthly account fee. This could be $0, $30, or even $80 depending on the plan. The second one, you mostly know this. This is transaction fees. Every EFT, wire, or sometimes even Interact e-transfers. They add up. And then the final, the FX markup. If you've ever paid an international vendor, received a US invoice, or converted currencies, your bank is taking a percentage off the top and not telling you clearly. The monthly fee is the smallest of your worries, and the FX fee is usually the one that adds up and is the biggest problem for most businesses. Let's run the numbers on a realistic small business. I'm going to use round numbers just so this is easy to follow. Say you're on a standard business account, $40 a month. You send about 20 EFT payments a month to pay contractors, suppliers, or invoices. At $2 per transfer, that's another $40 a month. Let's say you also send 2 international wires a month. At $30 a month, that's 60. You convert about 15,000 Canadian into US dollars every month to pay your US vendors. The bank applies a 2.5% FX markup on that conversion, and that's $375 every month, just in FX fees. Adding it up, that's $515 a month, or over $6,000 a year. And here's why the FX mark goes unnoticed. When you log into your bank and you convert currency, you see a rate. Let's say the mid-market rate, the rate banks used between themselves, is 1.36 CAD per USD. The bank shows you 1.33, the difference is their fee. They don't call it a fee, it's just a less favorable rate, and it disappears into the transaction. On a small transfer, it barely registers. On $15,000 a month, it's $375. Banks typically charge between 1.5 and 3% on FX on business accounts. If you've ever wondered why your recipient got less than expected, that's usually the reason. The fix isn't common. Provider that uses a rate closer to the mid-market and charges a small, clearly disclosed fee instead of bearing it in the exchange. There's actually a fourth cost that's actually an opportunity cost, and it usually gets almost no attention. Most Canadian business accounts pay close to zero interest on the cash sitting in them. If your business keeps on average a balance of $50,000, and plenty of businesses carry much more than that, you're earning maybe $50 a year at the big bank's rate. If that same $50,000 were in an account earning 2% interest, you'd earn $1,000 a year. That's not a transfer fee. That's money your bank is keeping by not paying you what your cash is worth. It's not a scam. It's just how traditional banking works. So what actually matters when picking a business account? 4 main things. The FX rate. What markup do they apply when you convert currency? The lower the better. I would look for usually below 0.5%. Transfer fees. What are you typically paying per EFT, per wire, or Interact e-transfer? Free or nearly free should be the baseline. Interest on balances. Is your idle cash earning anything? Even 2% matters if you carry a substantial balance. Accounting integration. Does it connect to a QuickBooks or Xero automatically? Reconciling manually is a hidden time cost. Monthly fees matter less than you think. A $40 a month account fee with no FX and free ETFs will cost you far less than a free account that hits you with a 2.5% every time you convert. This is exactly the problem that platforms like Ven were built to solve for Canadian businesses. Ven gives Canadian businesses CAD and US accounts, and their FX markup is significantly lower than the big banks. For businesses that convert currency regularly, that alone should cover the cost of the account many times over. On transfers, EFTs and Interact payments are free on both the Pro and Plus plan for Ven. On interest, Ven pays 2% on both CAD and USD balances, with no minimum balance required. That's meaningful if your business carries substantial cash. On accounting, it connects directly into QuickBooks and Xero with 2-way syncs, so the reconciliation side is handled automatically. The whole point is that your business banking shouldn't be a cost center. The right setup can actually put money back into your business. If you want to see how Ven compares to the current account, the link is in the description. The takeaway is your business banking cost is almost never what the monthly fee says it is. Add up your transaction fees, run your FX numbers, and check what your idle cash is actually earning. Most businesses find the real number is 2 to 3 times what they actually think. If you want more breakdowns like this for Canadian business owners, make sure you subscribe. I do this type of content and comparison frequently. Also drop a comment below. What's your current monthly fee for your business bank? And have you actually ever added up the full cost? I'm curious what people are paying. Thanks again, and we'll see you in the next episode.